Ladies and gentlemen, I've been doing some testing on the NAS 100, the NASDAQ basically. And I figured that we can basically use the US 30 strategy on NAS 100. So I'm going to go through a little bit of a walkthrough again, but it's the exact same concept as US 30. So if you know that like the back of your head, then feel free not to watch this video because I'm going to go through a few points and we're going to get it done. So without further ado, if we jump to the chart here, using the US 30 rules, now I won't go through too many demonstrations on this bad boy, simply for the fact that we've done so many in the past on US 30, so I probably won't. If you guys want more demonstrations, let me know, I can get them done. So basically it's the same thing and the same rules apply, and you'll see this on the Discord and the morning breakdowns as well that are posted on the website. And all we're looking for is the exact same thing. So we've marked out all the arrows, and the arrows signify exactly what we want to be looking for. If we break above, retest, 5-minute engulfing, take it back to the top. If we open in the zone, hit the top of the zone, such as this level here, get a 5-minute bearish engulfing candle. And we're going to take it all the way down to the bottom of the zone. Same exact thing goes. If we open at the bottom of the zone, then we can see a 5-minute engulfing candle, take it to the top of the zone. If we get a break below, we'd want to see a tap back up and price break further down. So without further ado, it is, when I say the exact same as US 30, it is the exact same thing. So if you only have 2 pairs to trade in US session, feel free, if US 30 is one of them, add this as well, because if US 30 is not playing ball, then NAS 100 might be doing so. So it's always worth just having that pair there. Again, don't add too many pairs, and have a set rule where you're only going to take 2 trades a day. For example, if you trade London session and you have a trade in there, then maybe have a rule you're only going to take 1 trade in US session. So without further ado, if we play price on, we know exactly what we're looking for here because it is the same thing. So we're just looking for price to break above. We get a tap back in now. Now we're waiting for an engulfing candle. So anything that engulfs the previous candle, that's good enough for me. So if we wait along here, play it along, will it stick there? Yes. Okay. So again, our entry signal is here. What are our 3 rules when it comes to putting a stop loss below the wicks? Ideally below the zone, but you're not always going to get there, and below the structure point. In this case, this covers all 3. Now where would you target? If you hop back to the 30-minute. Now, for the sake of backtesting and for the sake of going through this example, you would have to find a price all the way in the past. So all I'm going to do for this example is head to a higher time frame. Once I do that, I'll go back to the 30-minute, get you a zone, and then we can come back to the trade and see what we're looking for. So it turns out I've just gone on the daily there, as you can see by the top of the screen. We are at all-time highs, which is another perfect lesson that I can teach you guys. So at all-time highs, you chase structure points. Might not be clear now, but let us just go through the trade and I will walk you through what I'd basically be looking at. So hopefully it provides us some good structure points where we can put our stop losses below. So like I say, you're in this trade now, you've got your valid stop loss, your TP. This is where, if you do work a job, I would very much highly recommend, if we're at all-time highs, wait for the next day or wait until price starts coming down and you can catch some sells. Because unless you can stare at your computer or your phone screen and actively chase it up for, an hour, 2 hours, then it's just impossible to kind of carry a trade like this unless you move instantly to break even and hope for the best. But a lot of the times you're going to get stopped out. So it's up to you. And again, this is another one of those where you can go back and backtest it. Backtesting all-time highs, you probably have limited options, but at the same time, I would just recommend, if you're in an office job and we're at all-time highs, just please wait till price comes back down and you can actually set a stop loss, set a TP, leave it, until you're maybe 1% in profit or something like that. So as I'm playing price along here, we can see we've formed this structure point right here. Well, price was very generous on this day. But however, you can see there is this structure point right here. So what would you do when you're at all-time highs? If I could learn how to use TradingView, that would be fantastic. And I'm going to use the horizontal ray for this because the stop loss doesn't really, if you ever use TradingView, it's not actually ideal to use it. So our stops would move to there. Price is continuously pushing up. So again, this is when you could dive to a 1 minute time frame. On the 1 minute time frame, you could do the same sort of thing. However, just be skeptical that you can very easily get stopped out like that on the 1 minute time frame. So when we get huge bullish push up like this, you can wait or you can jump to the 1 minute and you can then chase some sort of structure points that it'll have on the 1 minute. But because we're on the 5 minute for this example, we are going to continue to play price on. And again, for me, I know it's just hit here, but again, for me, in this scenario, this is classed as a structure point. I would move my stop up to here. Yes, our TP got hit, but if you're sat at your desk and you're able to continuously watch the chart, then what's stopping you from just continuing to chase it up? Absolutely nothing. So you got your stop here, and you're still in a lot of profit right here. So why not just continue to chase it? You don't have to call it quits. So if we just keep pushing and watching price up, see if we form any sort of structure point. Again, we've formed a structure point here, so you get more profits. And then if we just wait, we've formed yet again more structure, which is here. Now, this is when it comes down to you to decide what you want to do. We can see we have this strong zone here that we keep tapping into, and we've sort of made these higher highs, higher lows right here. Let me just highlight them with the brush. So right here, and then we seem to be forming one right here, and we have a little one right here. It is completely up to you whether you want to move price under these little structure points here. They're not major ones, but they are still structure points. So if you want to have it under here, by all means, move it more into profit. Why not? Why not? Because you're already pushing all-time highs. So realistically, you've got no price action to go off. You've got no previous price action to go off. The best thing that I've figured to do is simply, if you have the ability to continuously watch the chart, is just chase it up like this. I personally, in this situation, I know for a fact, I would be where this white line is now. I would be under this structure point. Because there is no telling and there's no sort of estimating what price will do because we have nothing to work off. So I'm going to try and maximize as much money I can take out the market as possible. That doesn't mean closing profits up here, because what if this forms a structure point and keeps pushing up? I'm missing out on all the profits. So it's worth me taking a little bit of a hit if price comes down to this point, instead of me taking profits out here and missing out on a huge upside. So this is how you chase it up, and it's very simple. But a lot of people don't have the opportunity to, and this is formed under the head. So below the bodies, below the wicks, obviously not below the zone because we're well past the zone. But you can see you can gradually move, and this is a perfect example actually, you can gradually move your stop loss up. It's not always going to be like this. This is quite literally a perfect example. So it's not always going to be as textbook as it's all been made. A new higher low has been made, new higher low, new higher low, new higher low. You might get a new higher low and then immediately get stopped there. I mean, and that's the part of trading all-time highs. You don't really know. I mean, you never really know anyway. It's back to the Wolf of Wall Street quote, innit? No one really knows what they're doing, but we can get a good idea through strategy testing and numbers. So using that strategy testing, we can understand that if we're at all-time highs, we're going to just chase the structure points. That's all we're going to do. So if this forms another one, we're again going to go in. No, but we didn't get stopped out. If this is a little bit higher, yes it is because of the wicks. Why not move it a little bit more? That might be nothing. It might be, depending on your account side, £5, $5, euros, whatever. I'd still rather take €5 than leave it on the table, you know what I mean? So if we play price on here, and then eventually you would have been stopped out, which you would have closed at a lovely 1 to 5. And this is what I'm saying in my backtesting videos, that you can actually catch 1 to 5s, and it's not just 1 to 1s, 1 to 2s. You can actually catch big trades like this. All-time highs, I would never expect it to be as clean as this, but you can see the strategy again. It works for NAS 100. I made a video today. It'll be posted on Friday of me taking money out of the NAS 100. So using the same strategy. So this is backtesting, yes, but there's a video on the way of me. Well, it'll be already out by this point, but me taking money out of the NASDAQ. So it does work. So yeah, we'll go into another example, but this is basically how to chase a trade up. That's all you have to do. You can go on the 1 minute, but it's a lot more likely you're going to get stopped out on the 1 minute sooner, and you're going to miss out on potentially maybe another 1 or 2%. So just be careful. In other ways, it's going to work in your favor. You're going to close out with more on the 1 minute. But personally, I've been using the 5 minute for the longest time. Just use the 5 minute. You can add these other time frames, but that's when it starts to get a little bit, complicated. And then you start using the 1 minute for other instances, not just all-time higher highs. You start using it for, I'll just move my stop a little bit. And then it breaks the actual rules that we've been trading for the 5 minute. So it's up to you. Just don't develop bad habits with the 1 minute time frame, because it's very easy to do so. So if we load up another example here, we can see, what are we going to do? You all know what we're going to do. Higher highs, higher lows, baby. And we're simply looking for a break above, tap back in, push up. If we break below at the bottom of the zone, break below, wait for a tap back in, 5 minute engulfing, bearish, take it to the sell side. If we open in the middle of the zone, we hit the bottom of the zone, we're going to be taking it up if we get the right reaction, of course. And if we open in the middle of the zone, get a tap into the top zone, ideally we'd want a 5 minute bearish engulfing candle to take all the way to the downside. So without further ado, let us play some price on here. So we get a tap in, we're waiting for a 5 minute bearish engulfing to see if we can take it to the downside. As I'm speaking, it's producing, so there we go. We have exactly what we're looking for here. In this instance, we'd want to take it to the downside, so above the zone, above the bodies, and above the wicks. Where would you target? Well, the natural target is at the bottom of the zone. Again, you could jump on the 30 minute, see, is there any major structure points, for example, this one, support and resistance zones, that could reverse the trade, or you could use as a take profit one or a break even point. However, if we jump back to the 5 minute here and we play price on a little bit more, we can see we're forming structure. Now, as soon as we form this structure here, I would be looking immediately to move to break even, simply for the fact we've created this structure point here. Now, for me, it would make sense that if price were to come up, break this zone here, we would ideally get a tap back in and start heading to the upside. That is ideally what would be happening. So for me, it makes sense in my head, move the stops above the structure point and conveniently now to the break even, because as soon as we surpass this level here, that we might actually be pushing to the upside. So there's no point in me taking a loss when I can get the same information from a break even trade. So at this point I would be break even, and I would hopefully be trying to ride it down to this level here. Once we reach this level, I'd ideally be looking to move more into profit, or maybe just leaving at break even and seeing what price does further on. But it depends what it gives us, because you never really know. So if we play price on here, we can see it completely reverses. Now we can actually see it was a bit of a blunder. Red news and market open, never really a good combination. But in this instance, we've covered ourselves here. So just by looking at the market and adapting and analysing, actually, what can we see here? What is it giving us? Always read what the market gives you, and then you can miss out on losses. You can start taking some wins, and you can start understanding, actually, this makes sense to move my stop loss here, because if we surpass this level, then we might be heading to the upside, or then we might be heading to the downside, for instance. In this case, I think it was a pair of news and market open that caused, it's a very big candle. However, we moved to break even. So let's say we get another example, opportunity to get in the market, we can then take it. Because we have a 2-trade rule, if we lose the first one, then we don't trade at all, again, for the rest of the day. If we go break even on the first one, then we can go into a second trade, because technically it's like we haven't even taken the first trade, if that makes sense. So if given the opportunity now, whatever price does here, we can now potentially see some upside, or if we get a valid reaction from this zone again, we can again catch some sells to the downside. So without further ado, let us play price on and see what it gives us. So we're waiting for that tap back in. If we get a 5-minute bearish engulfing, then I will be in. So we never got it, never got it. Broke above the zone. Do we get a bullish engulfing? Yes, we do. And this just really highlights the importance of waiting for that 5-minute candle. As soon as you start getting a bit lazy with it, oh, well, this 5 minutes closed, but I'm not going to wait for an engulfing because this 5 minutes already closed. That's when you're going to run into problems. So always wait for an engulfing candle. Otherwise, you're going to get caught up in this mess here. And that is the last thing I'd wish on any of you. So we have our engulfing candle here. Below the wicks, below the bodies, and below the zone. In this instance, we can get away with it because the zone is so small. With the bigger zones, obviously you're not going to put it at the bottom of the zone, but in an ideal world, you would. However, I understand in a lot of situations, you're not going to get the chance to do that. So in this instance, we're below the bodies, below the wicks, below the zone. You could even go a step further and just have it below these wicks here. So if we jump to the 30-minute now, because we're looking for targets, our immediate target, and you've probably already clocked it, the top of the Friday the 29th of August. So that is what we can target. So if we put our take profit all the way up here, we are looking for a 122, which is very nice, especially if you're risking 2%. You've just made 4% like that, and it all adds up. So if we play price along here, you see it dances around a little bit, dances around. And again, you have structure points to work off if you want to move it into break even, or if you want to move into some profit. Then these are the given opportunities where you can. So if we play price along, however, it's way past 5 o'clock. Let us get the tool. Okay, so at 5 o'clock close, you would have made 0.5%. But if you look at the day for itself, you've gone break even. So you've stopped yourself from a loss already just by reading the chart. And then you jump into the next trade and you've actually made a profit on the day. So you come away from the day. Instead of losing 1%, you've made 0.5%, which is a win in any book. So as long as you read the market and read what it gives you and be patient with them 5-minute candles, and you can chase a trade up if you're at all-time highs, or I've never experienced all-time lows, but if for some reason it comes down to that point, then you can chase structure points. So it's all about understanding and getting that experience. The more trades you take, the more experience you will have, providing you learn from them, but have rules. Like I say, if we go break even on our first trade, we have the opportunity to get into a second trade if given the right chance on some of these charts. However, if you lose the first trade, for me, I call it quits. For other people, they can take another one, and if they lose that, then it's quits. But it's never normally above 2 or 3 trades, losing trades, people don't normally carry on after that because the mental for the day is just a bit ruined. So it's just better sleeping on it, coming back tomorrow with a fresh sort of mind, and going into the charts that way. So that's kind of, and this is all a learning curve, and you'll all learn it as you progress through your trading. So don't rush anything. It's all going to take time. Your time will come. But yeah, basically the bottom line is for this video, the NAS 100, NASDAQ, whatever you want to call it, you can trade it like US 30. Just be careful. It seems to be a bit more volatile. However, that is the video for today. And this will be added to the bunch of lessons for you guys. So thank you so much for watching.